We have a number of things to talk about again on this week's Cattle Call. I'm Chad Moyer. Cattle Call is a product of the Nebraska Rural Radio Association, sponsored in part by Wolf Auto, Small Town Strong. And once again, my guest on today's Cattle Call program is Brad Kooima, Kooima and Varilek there at Sioux Center, Iowa. Brad, thanks for joining us here today. A number of headlines to talk about this week. Even though it's a holiday week, there are a few other things to talk about. We'll get to that in just a moment. First of all, just a brief recap. It was a down week last week, but overall, how do you think the cash cattle performed when you look at where the prices ended up, volume, deferred delivery, things like that?
Thanks for having me on. First of all, Chad, it's my pleasure. I enjoy doing this with you as well. So a little bit of background. We did continue the pattern here that was established, 3 or 4 weeks ago, where we started to see a softening of the cash market, right? And actually somewhat more so in the north than in the south. We've narrowed the gap, the spread or whatever between the north and the south to a certain degree. But I think, is there all of a sudden a lot more cattle? No, not at all. Not in the north. In fact, our average weights in the north continue to plummet. In fact, steer carcass weights this week compared to last week, we are now 14 pounds under a year ago for Iowa, and much, much, much below what the average weights are in Kansas, for instance, 45 pounds below the Kansas weights for steer. I have never seen anything like that. So the north continues to remain very current. But it seems like what's happened here a little bit, to me anyway, Chad, is you've got a seller, a feed yard that maybe hasn't got in on these big prices yet. Probably a calf fed deal, especially in the north, guys that feed only calves. And these cattle make a lot of money. When you're making that kind of money, you're incentivized to sell cattle, even maybe a little quicker than you might have otherwise. And the other thing that, of course, incentivizes that is basis, which we'll probably talk a little bit more about here. So I think the weirdness of this thing is how every Tuesday we got a battle with some kind of deal. Like yesterday, we sharply lower again on Tuesday. We've had that now like 4 out of 5 Tuesdays, I think, where the market has to handle that. I'm happy today to report that we're getting a lot of those losses that we had yesterday back. But last Tuesday, of course, yesterday we were dealing with the announcement that the USDA had decided to reopen the Mexican border.
Yeah, well, that'll be a good segue into the next point. And can you break down that announcement a little bit? From what I've read, it's not all going to happen at one time and at all ports. This is kind of a stepped up approach. First of all, what do you think of the approach, and how is that going to translate into market activity, or how the market perceives that, Brad?
Yeah, that's a good question. I was a bit surprised to hear that we were going to do the announcement this quickly. I had been hearing that, with the concern about the potential spread of it, that it was maybe going to be later rather than sooner. Even some suggesting that it wasn't even going to happen this calendar year yet. But I think there's a lot of pressure put on them by the South, the Texas people. They've had 7 straight months of record low placements in Texas. And I'm sure that with all the empty pens and typically, a lot of those cattle come out of Mexico there, I would think that there'd been a lot of pressure put on the USDA. So what they decided to do is there's 5 delivery points or points of entry. And they're going to start with the 7th of July, next week, Monday, with the farthest one away. That one's actually in Arizona from where the screwworm is actually, or the Mexican border or near that area. So they're going to start with a point that's the farthest away. And then on the 14th, the next farthest, the 21st, the next farthest, the 28th, and then the first Monday of August, they'll open the one that's very close to the Mexican, right down to the tip of the Texas-Mexican border, with the idea that a lot of protocol in place, somewhat slowly, methodically, that they'd be, if something would happen, that they'd have to, pivot and change their mind, that they'd have time to do that rather than a hard opening. What I'm curious about a little bit, is it a market factor? I think, how can it not be to a degree? I would estimate, this is my own number, that we backed up maybe 600 to 700,000 cattle in Mexico that typically would have already been placed in the last, say, 5 or 6, 7 months. Last year, we imported over 1.1 million cattle out of there. So, and I don't know that Mexico has the ability, either from a facility standpoint or even a feed standpoint, of, oh, we'll just feed them here. That's a lot of cattle that you got to find a room for. So my expectation would be, Chad, that instead of placing a 400 or 500 pound calf, you're going to see a ton of these 7 or 8 weight cattle, probably, that are bigger now that they've been held back there. And the feeder in me is doing the math, going like, well, when is that bearish? Is it late fourth quarter, early first quarter, where there's more cattle there than we had thought on Monday? One would think that it would actually be more negative feeder cattle because increased supply, right? Now, a lot of those cattle are captive supplied cattle already, so maybe that impact won't be quite as big as it is. But feeder cattle futures act good today. Got not all of it, but most of it back from yesterday.
Yeah, and I've also speculated or kind of wondered, I've read a little bit on it too, is this announcement on the border connected with the July 9th and, the deferred, the tariff deals? Will tariffs become a story? Is this a part of that storyline, maybe?
Well, you're like me, kind of a grassy knoll guy, right? I mean, it seems like so much of this is interconnected and political more than maybe scientific. That's my opinion again. But it doesn't seem like there's been much effort to, lately the chatter to Canada has been not positive. There seems like there's been no dialogue with Mexico, and July 9 is the 90-day hold period when that's up. Now, maybe, to me, it's a big deal for pork and for corn, especially that we haven't had a little more publicity about that. I'm curious. I would suppose that I'd have to feel like if we're going to get along that well on the screwworm deal, maybe we're going to go ahead and acquiesce and get along a little better on the tariff deal too. That would be the direction I would lean based on the activity, but that's political guessing.
Yep. All right. Let's get to the portion of the program where we talk about some of our feedback that we've received from listeners and viewers. And let's start with this one on basis. You and I had talked about basis a number of months ago, and it was an interesting story, right? As this cash cattle market continued to move up, and the futures were really reluctant to follow along step by step. So now that it feels like maybe we're on the backside of this, what are your thoughts on basis going into the summer? Especially as maybe these futures and cash kind of try to come together at some point. And now, like you said, we have the border open again to some Mexican feeders coming into the U.S. What's your thought on basis?
It's a great question. I don't know. You're going to get maybe a C+ answer, but I'm going to give you my best shot. Okay. It's very, very, very complicated. As somebody that's in the futures industry, it's frustrating that you have here a contract that really is not having convergence, is not seeming to relate to. There's a too big of a disconnect between the underlying cash and the futures market, is what I'm trying to say. But to understand how we got here, just very, very briefly, I think, first of all, you've got a long speculator or a fund manager who going to decide whether he's going to go long or not. Okay, going to buy it or not. In an environment where the market's at an all-time so much higher than the old all-time high, it's not even, you can't even see it from here, right? And a trader that's afraid of, well, what if we have a recession? What if we have a tariff problem? What if we have whatever, a screwworm in Missouri? That story's 3 weeks old only, right? What if we have a plant closing? That story's only a couple of weeks old too. So I think that fear of a black swan type of event is part of the reason why we trade at a discount here. I have some issues with the setup of the CME contract, where it seems like all the rules they've made are made to benefit the hedger and to dumb down the futures contract to where it doesn't even reflect what a normal steer is that we feed in Nebraska or Iowa, or for that matter, even in the whole nation in terms of what the grade is and things like that. So we need to make a few rules that help the long speculator, I think. And this increased daily limits, that doesn't help either. I mean, that's another thing that chases the long speculator, and that's what you need to have some convergence when you're in this kind of a deal. Now, having said all that, we've had a deal where cash has proven to be the king over and over and over and over again this whole market rally, to the point where the futures still don't believe it. They can't imagine that we're going to stay this good that long, right? Okay, we'll give it to you that it's okay today, but we don't believe it'll last. it's a great thing to be in if you're in the industry, because it keeps you current. I mentioned that at the beginning of your show. If you're a hedger, you're further incentivized to sell cattle because of this tremendous basis that you've got. It's also just I'm going to give a little nudge to the people that want to make a deal with the packer for a basis deal. Heads up. I mean, these deals are not in your best interest. I mean, in my opinion, you'd be so much better off doing your own hedging and then negotiate your trade. And look at the kind of basis that we've had. So to try to give you an answer, I think the basis is going to stay like inverted like this, cash over futures, until we really do top the market. Then I think maybe things will be different. So I would say running through the summertime, I'm not saying you're going to be 20 over like you are right now, but I think that you've got a chance to be 8 to 10 all the way into the fall, and then we'll see. Once typically we get a little narrower when we get closer to December, but all signs fail in the case of this kind of mega bull market that we've had.
All right. So thank you so much for the question. And again, if you haven't yet, by all means, hit that notifications button. It'll let you know when the next cattle call comes out. And then you can react to some of the things that we've hit on here during cattle call as well. And this next question maybe isn't necessarily a marketing question, but a question or a comment as it relates to just what is going on in the industry these days. And it has to do with what do you use for genetics in your production system? And we had one individual who is maybe a little felt that just strictly the straight black genetics is not necessarily, maybe it's overdone. Maybe it's just not for everybody's liking. So are you happy with being a cattle feeder? Do you go straight black, or do you like the black white face situation? What are your thoughts on the performance of genetics?
I kind of like this question because a lot less pressure on me trying to figure out or to explain what the futures market is. Well, okay, so if they don't know me yet, you know that I can be sarcastic. When you run out, it doesn't matter what color they are. Some people have heard me say that a couple of times. But seriously, this guy's got a decent question here. For somebody that feeds cattle, first choice and a distant second for anything else would be an F1 cross baldy. Absolutely. A black cow and a Hereford bull, F1 cross baldy calf, nothing feeds as good as that, in my opinion. So I like where he's going with this. Certainly there's really good black cattle, but that's a breed that's been around a long time, so just like any other breed, there's good ones and bad ones, but crossing it up like that for somebody that feeds it. Now, I'm not saying if you're looking for mothering and calving ability and all that other stuff, but for somebody as a feeder, there's nothing better than an F1 cross baldy calf, in my opinion.
There you go. All right, from the horse's mouth, if you will, if you don't mind the the other species.
A lot better analogy than the opposite of that. That's for sure.
See, there you go. That's funny. So let's turn around and maybe just kind of look forward here. We have had some other announcements this week, and that is a trade deal with Vietnam. There's some rumors about India and maybe some other countries here. And like we said, going up to that July 9th date, it is kind of good to hear that some of these things are happening, right, Brad?
Oh, the trend of that thing, of the tariff stuff is I think is part of the reaction to our marketplace today, whether you're talking soybeans or cattle, everything up nice. I think, the Vietnam deal looks to be very one-sided in our favor. Now, there's a lot to do with cattle? Probably not. It used to be that a lot of meat went through Vietnam to China and other places, but not so much anymore. But that's positive. I think, like you said, the suggestion maybe that things are getting a lot better with India. Doesn't feel like it yet with Japan, but I think stay tuned, with whatever the latest tariff deal is. But if sometimes when they start to trend that direction, the Vietnam deal, to me, and I've only had a chance to really read it once, but it seems to be very one-sided in our favor. So, hope springs eternal, but I do know enough with this administration a little bit that it is unpredictable. So we're still at a big discount. Cash market still feels okay. So hopefully we can stabilize and keep this market okay for a while yet.
Yep. And then the last thing we want to hit on is what are your thoughts? We've had just a few trades so far in the cash cattle market, but understand, again, it is a holiday week, right? Where I think everybody would like to get work done before Friday so they can enjoy the Independence Day holiday. But what are your thoughts about cash trade this week?
Well, I thought I thought we were going to be steady lower, and I feel a little more optimistic now than I maybe did even this morning. Western Nebraska started at 230, went to 231. They're trading a few cattle there. Right here, just before I went on, my brother called and said I was bid 231 on a pen of cattle that we're showing, and I was bid 230 earlier today. Now, last week we got 233. So right now, I think the crowd's going to hold to see if we can get back to steady. And I think steady at 233 would buy cattle. And I think it's going to happen sooner rather than later. It might happen today or early tomorrow so they can get out of here too for the long weekend.
Yeah, all right. Brad, it's good to talk to you. Contact information for folks that'd like to reach out?
Well, kkvtrading.com, but we'd rather have you call 712-722-0023.
Brad, it's good to have you on. Thanks for the expertise. We'll talk to you next week, okay?
Thank you. See you then.
That's Brad Kooima, and Varilek at Sioux Center, Iowa, on this week's Cattle Call. Again, this Cattle Call is brought to you by Wolf Auto, Small Town Strong. Again, make sure you hit that notifications button, put a comment or a question in the comments below, and who knows, we might address it next week on Cattle Call. Have a good week. Chad Moyer reporting.